What's going on, guys, and welcome back to another video. So in today's video we're going to be adding two more companies to one of my pies, and following up from yesterday's video where, for example, we saw that we were lacking in a lot of my sectors. For example, in technology alone we had nearly 25% of my overall allocated funds, which certainly is way too much. Although it is in the green for now, I still want to kind of diversify across a lot more of my portfolios as such. So the ones in yellow here are the companies or sector pies that I need to invest further in and add more companies. So in today's video, we're going to focus on the top one here. First of all, consumer discretionary, and we're going to be adding two more companies into this pie. Currently, it's only worth about €182 or about $200, and it's currently about 4% of my overall allocated portfolio. But before we discuss these two companies, I just want to show a quick note here as well in terms of my other pies. So my utility sector pie, you can currently see now it's back to worth 0, and that is because there was one company here, Waste Management, but after doing further research, I kind of believe it's better suited actually in my industrial pie, so I moved that position from my utilities to my industrial pie, which means now we have 3 holdings in my industrials. Currently it's worth about €210, and we were about 5.08%. So we had 3M, which is currently up about break even, to be honest. Caterpillar, which is up nearly 10%, and Waste Management, the new company I moved into this pie, which is currently up 7.21%. So throughout this week, we're going to be adding companies into my consumer discretionary pie, which we'll be adding today. By ETF, I said in yesterday's video that although there's only 2 holdings here, it is made up of the Vanguard S&P 500, which tracks the top 500 companies in the US, and also I have the FTSE 100 ETF, which tracks the top 100 companies in the UK. So I'm quite happy just to have the 2 companies in this ETF portfolio, as it really is diversified into about 600 companies, which is definitely enough. And also, as the week goes on, we'll be focusing on the materials, real estate and utility sector pies. So here we are on my trading 2-on-2 portfolio, currently worth about €4,462, and we're up about 5% or €221 in total. So as I said in yesterday's video, I'm having a rule of thumb that I'm only going to hold 5 companies maximum per each of my holdings or each of my pies. So once it gets to the 5, we'll be capping it, and if I want to add a new company, then I'll have to remove another. But I want to stick to the 5 for now, and I will only be investing further into any of these companies once it drop below the 3% to improve my dollar cost averaging. Currently, on my consumer discretionary pie, we have €182 invested. We are currently up 4.23%, and as I said, we just have the 2 holdings for now in the form of Tesla, which is up 11.17%, and McDonald's, which is currently down about 1%. So we're going to be adding 2 further companies into this pie today. So the first of the new companies that I'll be adding into my existing consumer discretionary portfolio is a well-known company in the form of Nike, which is an American multinational corporation that engages in the design, manufacturing, worldwide marketing of such features as footwear, accessories and services, and it is headquartered in Oregon. Nike is traded on the New York Stock Exchange and has ticker symbol NKE, and at time of recording, their share price was $128.90. We can see here that they pay a forward dividend of about 0.76%, or just under $1 paid per share on a quarterly basis. So we can see on Nike's 1-month chart that about a month ago they were at $130 a share, and they had a small bit of a dip down to about $120, and slowly started to recover again and are back up to about $129 a share. And even on their 1-year chart, this time last year, they were sitting at about $89 or $90 a share, went down to about 67 in the crash in March. But since then, they've actually nearly doubled in value, which is very impressive. And certainly Nike is one of those blue chip companies where they're really diversified. It's not just like the clothing line, they really have a lot of their eggs are spread out, not all in one basket, which is definitely the types of companies I love to invest in, as they're quite diversified. In terms of Nike's top shareholders, the top 3 are the Vanguard Group with 8.38%, BlackRock with 7.63%, and State Street's in third position with just under 5% at 4.72%. And the second company on today's list, and the fourth company overall in my consumer discretionary portfolio now, will be Starbucks, another well-known blue chip company. Starbucks is an American multinational chain of coffee houses and roastery services headquartered in Seattle. As the world's largest coffee house chain, Starbucks is seen as the main representative of the US second wave of coffee culture. Starbucks is traded on the Nasdaq and has ticker symbol SBUX. And at time of recording, its share price was $90.65 per share. Starbucks currently pays a forward dividend of just under 2% at $1.80 per share, which is paid on a quarterly basis. We can see from the 1-year chart, this time last year, they were sitting at about $81 or $82 a share, and like 99.9% of the companies in March had a nosedive due to the crash, and it went down to about $58 per share. But since then, it has recovered quite well and has gone up to about $91 a share as of now, which is quite impressive. In terms of Starbucks' top holders, we have the Vanguard Group with a 7.78% holding, BlackRock with 7.23%, and State Street with 4.34%. So by adding these two companies to my consumer discretionary pie, we can see now that there will be 4 holdings, and I'm quite happy with diversification in this pie alone. For example, we have Tesla, which is in the electric vehicle sector, McDonald's, which is in the fast food industry, Nike, which is in the sporting sector, and Starbucks, which is in the coffee sector. So for the start, tomorrow when the market opens, I will be buying probably just 1 share of each, so Nike and Starbucks, just to get the ball rolling, and then over the coming days and weeks, I will see if they start to go up or down in value, and if they start to drop in value a bit, then great, I'll start to buy more to help my dollar cost averaging at the start to get a good stronghold into these companies. As I'll be a long-term investor, it's good to kind of be patient as well and kind of wait for the right time to buy those companies. But it's good to see now that they're already put into my consumer discretionary pie, which brings up to 4 companies. So if you just go back into my overall spreadsheet here that I made in yesterday's video, this will bump the consumer discretionary pie up to 4. And again, when I put some value in here, it will increase my percentage weighting. So in tomorrow's video, as I said, we're going to leave the ETFs at 2, as it's 600 companies within those 2 ETFs. So I'm definitely diversified there. So in tomorrow's video, we might look to adding maybe 1 company into the materials, 1 into real estate, and 1 into utilities. And again, even though I'll be adding more companies to each of the pies that I just mentioned, I will also be keeping an eye out for any of my existing investments. And if they drop below the 3%, I'm going to be buying more, as I have an alert set up to notify me when any of my 30 companies drop below the 3% margin, as I will start buying up more then to improve my dollar cost averaging. So with all that being said, guys, that kind of brings the end to today's video. I just want to give you a brief update on my thought process behind adding these 2 companies into my consumer discretionary pie this week, and my further actions that I'll be undertaking throughout the week. And finally, I just want to say thanks very much to the 370 people that have subscribed to this channel so far and started to follow my journey, which I find very cool, to be honest, that people are actually interested in seeing how others are investing and their thought process and both ups and downs throughout the process. I love seeing those kind of videos myself, so that's kind of why I started to make them myself as well. I have 370 subscribers so far, so thanks very much to every single one of you. And in the last few weeks, I've really seen my view count kind of going up from, let's say, we can see here, my Trading 212 portfolio got about 153 views yesterday, and then I have 131, 137 in comparison to, let's say, a few weeks ago where we were getting about 30 or 40 views per video. So thanks very much for the continued support, and as always, if you like the video, please consider smashing that like button, and if you're new around here, please consider subscribing to the channel, as it would really help the channel out going forward. Thanks so much as always for watching, and I will see you all in tomorrow's video.